If you're holding American Silver Eagles right now, what I'm about to show you could be the difference between watching your wealth multiply or missing the biggest precious metals move in decades. And I'm not talking about some distant future scenario. The data I've uncovered suggests we're in the early stages of something extraordinary. Let me start with something that should make every Silver Eagle holder sit up and pay attention. While most investors are focused on the spot price, there's a hidden premium structure developing that's telling us a completely different story about what's really happening in the physical silver market. You see, when you look at American Silver Eagles, you're not just looking at silver. You're looking at the most recognized, most liquid, government-backed silver coin in the world. And right now, the premium on these coins is doing something it only does before major price explosions. Think about what a premium actually represents. It's the difference between the paper price of silver and what people are willing to pay for the real thing in their hands. When premiums spike, it means one thing: there's more demand for physical metal than there is supply. And when that happens with the world's most popular silver coin, you need to pay attention. But here's where it gets interesting. The premium spike we're seeing isn't happening in isolation. It's happening while industrial demand for silver is hitting all-time highs, while mine supply is struggling to keep pace, and while a growing number of institutional players are waking up to what retail investors have known for years. Let me paint you a picture of what's really driving this. Silver isn't just a precious metal anymore. It's become absolutely critical to the technologies that are supposed to define our future. Every solar panel requires silver. Every electric vehicle uses significantly more silver than traditional cars. 5G infrastructure, medical devices, water purification systems, the list goes on. And here's the kicker. Unlike gold, which mostly just sits in vaults, silver gets consumed. It gets used up in industrial applications where it can't be economically recovered. We're literally using up the above-ground supply while mine production struggles to replace it. Now, I want you to think about something. When was the last time you heard about a major new silver discovery? When was the last time a mining company announced they were opening a significant new silver mine? The answer is, you probably haven't, because it's not happening at the scale we need. Silver production has been essentially flat for years, while demand has been climbing steadily. And it's not just industrial demand. Investment demand has been surging too. Silver ETFs have been seeing inflows. Central banks in certain countries have been adding silver to their reserves alongside gold. Retail investors have been stacking Silver Eagles like their financial lives depend on it, and maybe they do. Because here's what most people don't understand about silver. It's not just an inflation hedge. It's not just a safe haven asset. Silver is the most undervalued strategic resource on the planet right now. And the gap between its paper price and its true value is getting wider every single day. Let me show you something that should concern every investor who doesn't own silver. The gold-to-silver ratio, which historically averages around 60-1, has been trading at levels that make absolutely no sense. We've seen it spike above 80-1, even touching 100-1 during certain periods. What does that mean? It means silver is historically cheap compared to gold. But here's where it gets really interesting. Every single time in history, when the gold-to-silver ratio has gotten this stretched, silver has eventually snapped back with explosive force. We're talking about moves of 100%, 200%, even 300% in relatively short periods of time. And the setup we're seeing right now looks eerily similar to those previous periods. Now, I know what some of you are thinking. You've heard this story before. Silver's been about to explode for years, and you're right to be skeptical. But something's different this time. The fundamentals have never been this compelling. The supply-demand imbalance has never been this severe, and the macroeconomic backdrop has never been more favorable for precious metals. Think about what's happening in the broader economy right now. We've got inflation that's proving far stickier than central banks expected. We've got government debt levels that are completely unsustainable. We've got geopolitical tensions that are driving countries to diversify away from dollar-denominated assets. We've got a growing movement toward de-dollarization that's accelerating faster than most people realize. And in that environment, what do you think happens to hard assets? What do you think happens to silver, which is both a monetary metal and an industrial commodity? It becomes one of the most attractive assets you can own. But let's get specific about American Silver Eagles, because there's something unique happening with these particular coins. The U.S. Mint has been struggling to keep up with demand. There have been periods where they've had to ration sales to authorized dealers. Production has been constrained by blank availability. And all of this is happening while demand continues to surge. What does that create? It creates a situation where the premium on Silver Eagles starts to decouple from the spot price. And that premium becomes its own market signal. It's telling you that people are willing to pay significantly more than the paper price to get their hands on physical silver in the most recognizable form. And here's something most investors don't realize. When premiums spike like this, they tend to stay elevated even after the initial surge in demand subsides. Why? Because dealers and investors remember what happened. They remember the shortages. They remember the scramble to find inventory, and they price in that risk going forward. So if you're holding Silver Eagles right now, you're not just holding silver. You're holding the most liquid, most recognizable form of silver, with built-in premiums that act as a buffer against price volatility and a multiplier during price surges. But let's talk about what could trigger the next major move in silver prices. Because understanding the catalysts is crucial to understanding the opportunity. First, there's the industrial demand story. The transition to renewable energy isn't slowing down. It's accelerating. Every major economy has committed to aggressive carbon reduction targets, and silver is absolutely essential to making that happen. Solar panel installations are projected to continue growing at double-digit rates for years to come. That alone represents hundreds of millions of ounces of silver demand that didn't exist a decade ago. Then there's the electric vehicle revolution. Traditional cars use about half an ounce of silver. Electric vehicles use up to an ounce or more. As EV adoption accelerates, that's another massive source of incremental demand that's just getting started. But here's where it gets really interesting. There's a growing recognition among institutional investors that silver is massively underowned relative to its importance in the global economy. Pension funds, endowments, family offices, they're all starting to look at silver as a strategic allocation. And when institutional money starts flowing into a market as relatively small as silver, prices can move very quickly. Now, let me address something important. If you're sitting on retirement accounts, if you've got significant savings in traditional assets, you need to understand how precious metals can fit into your overall strategy. A lot of people don't realize you can actually hold physical gold and silver inside certain retirement accounts without triggering tax penalties. I put together a comprehensive guide on how gold IRAs work, how you can get physical precious metals into your retirement accounts, and what you need to know if you're sitting on $100,000 or more in retirement savings. It's completely free, and you'll find it in the description below. Worth checking out if you're serious about protecting your wealth with hard assets. But let's get back to what's happening with silver right now. Because the technical picture is just as compelling as the fundamentals. When you look at the price charts, silver has been building a base for years. It's been consolidating, testing support levels, shaking out weak hands. And that kind of base building is exactly what you want to see before a major breakout. It's the market gathering energy for the next leg higher. And here's something that should get your attention. Silver has a history of explosive moves that catch everyone off guard. In 2010 and 2011, silver went from around $18 an ounce to nearly $50 in less than a year. That's a 177% gain in a matter of months. And the setup we're seeing now has some eerie similarities to that period, but I want to be clear about something. I'm not predicting silver is going to $50 tomorrow. What I'm saying is that the conditions are being set for a significant move higher. And if you're holding Silver Eagles, you're positioned to benefit not just from the price appreciation, but from the premium expansion that typically accompanies major silver rallies. Let me explain what I mean by that. During the 2011 silver spike, premiums on Silver Eagles went absolutely crazy. People were paying $10 or $12, even $15 over spot just to get their hands on these coins. Why? Because when silver is moving fast, people want the most liquid, most recognizable form. They want American Silver Eagles. So if silver goes from its current levels to, say, $40 or $50 an ounce, you're not just making money on the spot price appreciation, you're also making money on the premium expansion. Your Silver Eagles could be worth significantly more than the spot price would suggest. And that's the hidden advantage that most investors don't fully appreciate. Silver Eagles aren't just silver, they're a premium product with built-in liquidity advantages that become especially valuable during times of high demand and tight supply. Now, let's talk about what's happening in the paper silver market, because this is where things get really interesting. The COMEX, which is the primary exchange for silver futures trading, has been showing some unusual patterns lately. Open interest has been elevated, the ratio of paper claims to physical silver has been growing, and there are increasing questions about whether the paper market can continue to suppress the physical price indefinitely. Here's the thing about paper markets. They work great when everyone's playing along, when most contracts are settled in cash, when physical delivery isn't a major concern. But what happens when a growing number of market participants start demanding physical delivery? What happens when the paper market's ability to influence the physical price starts to break down? We've seen glimpses of this already. There have been periods where the spread between paper and physical prices has widened significantly. There have been delivery delays. There have been premiums that have spiked to levels that shouldn't exist if the paper and physical markets were truly in sync. And this is where American Silver Eagles become even more important, because they exist outside the paper market. They're physical silver in your possession. They can't be rehypothecated. They can't be leveraged. They can't be printed into existence by a central bank or created with a keystroke by a futures exchange. When you hold Silver Eagles, you're holding real money. You're holding a tangible asset that has maintained its value for thousands of years. And in a world where trust in financial institutions is eroding, where currency debasement is accelerating, where the gap between paper claims and physical reality is growing, that matters more than ever. Let me share something that should concern every investor. The total value of the global silver market is tiny compared to other asset classes. We're talking about a market that's smaller than the market cap of many individual tech companies. What happens when even a small percentage of global wealth decides to allocate to physical silver? What happens when institutional investors start treating silver as a strategic asset rather than just a commodity? The answer is prices go much, much higher, because there simply isn't enough physical silver available to satisfy that kind of demand at current prices. The market would have to reprice dramatically to bring supply and demand back into balance. And here's where the supply situation gets really interesting. Silver mining is incredibly challenging right now. Most silver comes as a byproduct of other mining operations, primarily copper, lead, and zinc. So silver supply is largely dependent on the economics of those other metals, and with mining costs rising, environmental regulations tightening, and new discoveries becoming increasingly rare, the supply side of the equation is getting tighter every year. Meanwhile, above-ground inventories are being drawn down. Silver that's sitting in vaults, in ETFs, in various stockpiles, it's being consumed by industrial demand faster than it's being replaced by mine production. We're literally eating into the accumulated silver supply that's been built up over decades. And once that silver is gone, once it's been used in solar panels or electronics or medical devices, it's gone. It's not coming back. Unlike gold, which mostly just moves from one vault to another, silver gets consumed. And that creates a fundamentally different supply-demand dynamic. Now, I want you to think about what this means for Silver Eagle holders. You're not just holding silver. You're holding a finite asset that's becoming increasingly scarce in the most recognizable and liquid form at a time when demand is accelerating and supply is constrained. That's a pretty compelling value proposition. But let's talk about the geopolitical dimension, because this is something that doesn't get enough attention. We're living through a period of significant geopolitical realignment. The post-World War II order that's dominated for the past 75 years is being challenged. Countries are forming new alliances, new trading blocs, new monetary arrangements. And in that environment, what do you think happens to precious metals? They become increasingly important as neutral reserve assets. They become a way for countries to diversify away from any single currency or any single geopolitical bloc. And silver, as both a monetary metal and an industrial commodity, becomes especially attractive. We're already seeing this play out. Central banks have been accumulating gold at record rates, but there's a growing recognition that silver deserves a place in reserve portfolios too. It's more affordable than gold, it has industrial applications that make it strategically important, and it offers similar monetary properties in terms of being a store of value outside the traditional financial system. And here's something that should get your attention. If even a small percentage of central bank reserves shifted into silver, if sovereign wealth funds started allocating to silver the way they allocate to gold, the impact on prices would be enormous. We're talking about a market that's simply too small to absorb that kind of institutional demand without a dramatic repricing. So when you're holding Silver Eagles, you're not just making a bet on silver prices. You're positioning yourself ahead of what could be a major shift in how the world thinks about monetary assets, about strategic resources, about the role of precious metals in a multipolar world. Let me bring this back to something practical. What should Silver Eagle holders be thinking about right now? What should you be watching for? What are the signs that this price spike is really taking hold? First, watch the premiums. If premiums on Silver Eagles continue to expand, if they start reaching levels we haven't seen since the last major silver rally, that's a strong signal that physical demand is overwhelming supply. That's the market telling you something important is happening. Second, watch industrial demand data. If solar panel installations continue accelerating, if EV adoption continues growing, if 5G infrastructure build-out continues expanding, all of that translates directly into silver demand that has to be satisfied regardless of price. Third, watch the paper market. If we start seeing more delivery requests on COMEX contracts, if we start seeing larger spreads between paper and physical prices, if we start seeing signs that the paper market's ability to influence the physical price is breaking down, that could be the catalyst for a major repricing. Fourth, watch institutional flows. If we start seeing major pension funds, endowments, or sovereign wealth funds announcing silver allocations, if we start seeing new silver ETFs launching or existing ones seeing major inflows, that's institutional money recognizing what retail investors have known for years. And fifth, watch the macro environment. If inflation remains elevated, if currency debasement continues, if geopolitical tensions escalate, if the de-dollarization trend accelerates, all of that creates a more favorable environment for precious metals in general and silver in particular. Now, here's something important to understand. Silver doesn't move in a straight line. It's volatile. It can be frustrating. There will be pullbacks, consolidations, periods where it feels like nothing is happening. But the long-term trend is being driven by fundamentals that aren't going away. The supply-demand imbalance is real. The industrial demand growth is real. The monetary debasement is real. And if you're holding Silver Eagles, you're holding an asset that's positioned to benefit from all of these trends. You're holding the most liquid, most recognizable form of silver, with built-in premiums that provide downside protection and upside leverage. But let me be clear about something. This isn't financial advice. I'm not telling you to buy or sell anything. What I'm doing is laying out the case for why Silver Eagle holders should be paying very close attention right now. Why the setup we're seeing is potentially historic. Why the price spike we're witnessing could be just the beginning of something much larger. Because here's the reality. We're living through a period of unprecedented monetary experimentation. Central banks have printed more money in the past few years than in all of previous history combined. Government debt levels are at peacetime records. The purchasing power of fiat currencies is being systematically destroyed. And in that environment, hard assets matter. Tangible assets matter. Assets that can't be printed, that can't be debased, that have intrinsic value independent of any government or financial institution, they matter more than ever. Silver Eagles represent all of that. They're government-minted coins with guaranteed weight and purity. They're recognized and accepted worldwide. They're small enough to be practical for transactions if it ever comes to that. They're large enough to represent meaningful value. They're the perfect intersection of monetary metal and practical asset. And right now, they're telling us something important. The premiums are spiking. The supply is tight. The demand is strong. The fundamentals are compelling. The technical setup is favorable. The macro environment is supportive. All of these factors are aligning in a way that we haven't seen in years. And if history is any guide, when all of these factors align, silver doesn't just move higher. It explodes higher. It catches everyone off guard. It makes moves that seem impossible until they happen. So if you're holding Silver Eagles right now, pay attention. Watch the premiums. Watch the supply situation. Watch the demand data. Watch the macro environment. Because what we're seeing could be the early stages of a move that defines the next several years in the precious metals market. And remember, Silver Eagles aren't just silver. They're the most liquid, most recognizable, most trusted form of silver in the world. When silver moves, they move faster. When premiums expand, they benefit more. When supply gets tight, they become even more valuable. This is your moment to understand what you're holding. This is your moment to recognize the opportunity. This is your moment to position yourself ahead of what could be one of the most significant precious metals moves of our lifetime. The price spike is here. The question is, are you ready for what comes next?